There's no Wall Street topic that gains more heated debates than the prospect of a cannabis company with rapid growth. And that company would likely be Aurora Cannabis, the world's second largest cannabis company by market cap, and with sales and operations in 24 countries. So, let's take a look. Analyst Vivian Azer of Cowen and Company believes that Aurora's cultivation footprint provides Aurora with the necessary infrastructure to weather early storms in adult use while continuing to grow higher value revenues in the medical market. This conclusion has led Azer to reiterate the company with an outperform rating and a price target of 15 Canadian dollars per share. Azer's investment thesis points out that as Aurora continues to expand its geographic breadth and grow its supply, the company is securing its leadership position in capacity and profitability. Further, Azer notes that the company's presence in 23 international locations gives it a competitive advantage to dominate in the international medical market, which she estimates will grow to $31 billion by 2024. Azer also believes Aurora has the ability to reach positive earnings before interest, taxes, and depreciation, or EBITDA, as early as the fourth quarter of 2019 at a time when many peer companies are struggling with profitability. In large part, this is due to Aurora's advantage of economies of scale. However, there is the obvious obstacle of increasingly restrictive regulatory roadblocks and the potential of lower than expected consumer demand. Azer is not alone in her positive outlook for Aurora. Of 8 analysts covering Aurora, 6 have a buy rating and 2 have a hold rating. The consensus price target is $9.85 per share. But who follows the consensus? So, let's take a look at our charts. We're looking at the monthly chart on Aurora Cannabis Inc., and the symbol is ACB. For disclosure purposes, I don't hold any shares of ACB at this time. And Aurora Cannabis, as you can see by this chart, is a growth stock, pun intended. Basically, in 2015 and 2016, it went sideways. Then, mid 2016, it started a more or less stair step process in an uptrend. It's not the perfect stair step, but it's not too bad either. Previous highs were here in late 2017 and then mid to late 2018 above 12, the current price $7.63, but the entire time has stayed above the 20 EMA, so I think that's important. We'll see that indicated here in the MACD. It looks like the top was at that level there, and then the decline over the last, say, year and a half has been relatively shallow. We had this move down here with a fast line, and then an attempt to move back up and through the slow line got reflected back down here, and that's a relatively shallow reflection. So, in my opinion, that's going to consolidate once again here within the next couple of months or a few quarters at the most. So we'll have to watch that. You can see in the histogram, at least in my opinion, that this move down here was most negative, and it's probably going to be more negative than this move here, even though this move isn't quite done yet. But I just don't think that the current move here is going to get much more negative than it already is. We'll have to wait and see. But the price rate of change shows a very negative move at this point. The fast line moved up toward the slow line, and it'll most likely get reflected here back down, and then we'll have to wait to see if it makes another move up. But it is above zero, which is somewhat favorable. Relative strength's not too bad. It's at a moderate 53.45, and it's kind of gone sideways for the last, say, year and a half or so between these channel lines here. I'd like to see it break out and head up to that overbought territory. If it does, then the price is going to move. I like these stochastics. This is shallow, but it still shows a nice dish with a basing pattern. So I'm expecting the fast line to consolidate and then attempt a move back above the fast line and hopefully back above the 50 or midline here too. Volume looks decent for a growth stock, for a young company. And then the Williams pretty much like the price rate of change, looks like the nice dish, and then the move up here. So there is some strength starting to gather, and I'd like to see it move above that negative 50 line. Again, that Williams kind of looks like the stochastics as well. Back up to the price chart. I think things look decent. Watch the trend as it moves on up. Hopefully, it's going to stay mostly above that 20 EMA. And if it does, I think it's going to make another stair step here in the next, say, couple of months or few quarters. But as usual, conduct your fundamental analysis. And for today, that's ChewDog Charts. Thank you.